Today's video is about Axis Focus Fund. So it has been in existence from 29th June 2012. The present fund manager is Sachin Relekar. He has been managing since February 2024, slightly over an year. So if it is redeemed before 1 year, you have an exit load of 1%. But ideally, any equity investment, it has to be more than 5 years. So for somebody with that horizon, this will be relevant. So the benchmark is Nifty 500 is what they are using. The AUM they are having right now is around 12,000 crores. So if you look at the direct expense ratio, it is around 0.82% and the regular expense ratio is around 1.74%. So that is like approximately over 0.9% is something which goes to the distribution and the other expenses like marketing and all other expenses the fund incurs for the regular funds. But if you are going for a financial advisor and he or she is recommending this fund, so if he or she is charging around 0.7%, over 0.7% plus GST, you will end up paying something similar to the regular expense ratio. Now let's look at how this fund stacks against various indices. So the direct, regular, and regular. So we are comparing it with Sensex, Nifty 50, Nifty 100, and Nifty 500. So again, the first 3 years horizon, the horizon 1 to 3 years time period doesn't matter, but we have anyways done this. So 5, 7, 10 years is what matters the most. So if you look at the direct fund and the regular fund, so from year 3 onwards, there are no negative instances. That's something which is good with this fund, right? So compared to the indices, the first 3 years there are negative instances. On the 5 year basis, there is there are few negative instances on Sensex, Nifty 50, Nifty 100, and Nifty 500. But the probability is less. The chances were like negative instances were less than 1%. On 7, 10 years, there are no negative instances only. So what matters the most is the median returns and the minimum returns because 50% of the people will end up here rather than here or else rather than here, right? So the median return is around 14.94%, that is 15%, and the minimum return is around 11.23%. So for the regular, it is around 1.59% and 9.99%. The 1% is something which is getting knocked off because of the expenses which will incur. Again, when you are going for a distributor or a financial advisor, obviously if they are helping you with a asset allocation, risk profiling, the goals, and if they are able to explain to you the rationale of the fund and everything, maybe it makes sense if you go with them. Otherwise, if you are somebody who is capable of doing all this stuff, then you have to go for the direct funds. Let's see how it compares with the different indices. So it has done well compared to the Sensex on a 10-year horizon basis. It has delivered a 3 percentage points 3 percentage points absolute alpha over 10-year horizon. And on a regular basis, if you look at it, the alpha is slightly less than 2 percentage point. And the outperformance get carried on Nifty 50 as well. But when you look at Nifty 100 and Nifty 500, the median returns are around 12.62% and 13.87%. When you compare this with the Axis Focus fund, both direct and regular, this is not so great, right? You have done a 1 percentage point slightly higher than the indices. But when you are going for the active fund managements, right? So typically you want to look at a higher amount of returns, especially over a 10 years horizon. But if you look at the regular fund, it is pretty much matching the performance of the index. It is between the performance of Nifty 100 and Nifty 500. Right? The median return of Nifty 500 is 13.87%, whereas the median return of Axis Focus regular fund is around 13.59%. So the direct fund has done slightly better than the index, right? But again, these are the past returns, and this is not how you. This has to be one aspect when you are choosing a fund to invest in because the past performance need not replicate the future performance. It happens both ways. The funds which have done in the past really well in the past may not be able to replicate a good performance in the future. And at the same time, it is equally true that the funds which have done, in line with the index performance or have not delivered alpha over the index may end up delivering good returns in the future. Right? Both are possible. That's the reason why if you are going with a distributor or an advisor, you have to ask them the rationale why they think this fund will do well. Otherwise, you have to do your own research. Now, let's look at how the NAV of these funds changed over different time horizons, right? So from 2014 to 18, if you look at it, Axis Direct, both regular and direct, there is a good amount of divergence if you look at it. So from 2014 to 2016, almost the performance has been in line, right? For the 2 years. And there is a good amount of divergence from 2016 to 18. Okay. So in this 5 year horizon, the first 2 years has been like pretty much flat, right? And from 2019 to present day, if you look at it, the performance has been pretty much in line. And in fact, from 2022 onwards, the indices have done better compared to both the funds, both the Access Direct and the focused funds, right? That's the reason why when you are investing, there are multiple cycles which every fund has to go through. That's the reason why you have to invest during a very longer horizon. If somebody has seen this chart and if they have invested, so most likely you will be seeing a huge amount of underperformance. That's the reason why you have to look at the performance of the past returns, but you have to take it with a pinch of salt, right? And at the same time, you know, if you look at it, if you have accumulated more amount of index units here, so your performance would have been a lot higher. So slightly better performing, Axis has performed better till this point. But if you look at it, the fall has been steep compared to the index, and the rise has been rise has not been that much. It pretty much, if somebody has entered here, after 4 years of time from 2021 October to 2025 April, the performance has been like 20% of absolute return in 4 years time. So that is like less than the fixed deposit return, right? So the time from the fund manager has taken over, that is from 2024 February. So pretty much it is in line with all the indices. There is hardly much change here. So, but again, slightly over 1 year is not much time to judge a fund manager. He's an experienced fund manager and he has been having many other funds. So probably when you are investing, when there is a change in the fund manager, it makes sense to look at the thesis of how the fund manager invests by looking at his other funds, right? So, so this video is for an educational purpose only. It is neither a recommendation to buy nor sell the asset class in discussion. Especially when you are choosing an active fund, you have to do your own due diligence, right? Like risk profiling, like risk profiling, and whether it is suitable to your asset allocation or a goal planning or financial plan as well. In case you are not somebody who is willing to do this, maybe it makes sense if you go to a distributor or a financial advisor who does this all work for you, right? Thank you.